Hello everyone, today is Tuesday, July 21st, 2020. My name is Evan and welcome back to another midweek market recap video. We're going to kick things off with our market technicals dashboard. We can see stocks on the session here today were mixed. The Dow Jones, S&P, and Russell were all positive on the session, anywhere from 27 basis points up to almost 1.5% here for the Russell 2000. Notice the Nasdaq 100 down almost 1%, 0.79 basis points here into the close. Now the 5-day change numbers, everything is positive here. The Russell 2000 is the standout to the upside, over 4%. Meanwhile, the Dow Jones is the laggard here, up less than 1% over the past 5 trading sessions. If we look at the major indices versus some of these key simple moving averages, we are above all of them across the board. Now, if we scroll down and take a look at sector performance, you can see energies, industrial, and materials are at the top of the list, about 3 to almost 5% over the past 5 days. And on the downside, we have real estate, we have consumer staples, and we have consumer communication services, 1% up. Only red here is real estate, down just slightly over the past 5 trading sessions. Now, in terms of major markets, silver really running away with it, seeing a big move today and over the past 5 days, up over 10 or almost 10%. And this is, sort of following up an already big and sort of extended move. So silver getting some nice gains there. Oil and high yield rounding out the top 3. And on the downside, we got volatility continuing to unwind, we got natural gas, and we got the TLT. So let's jump into the charts now. Let's take a look at TC2000 here. We've got our equity grid open, we've got our smart trend filters applied, and we have price, which are the dashed white lines on all of these charts. So if we take a look here from top left and we look at the S&P 500 weekly candle, you can see, of course, we are starting to break out now in price above the prior June highs that we made right at the start of June, where we sort of topped out, pulled back, and now we're starting to get back above it. Trend is bullish here. It has been for quite some time. Nasdaq in the top right, again, price starting to move back up towards highs. Trend is bullish. It has been, no changes there. Russell 2000, you can see not quite back up to the June highs in this major average. You can see it is heading back that way. The trend is bullish, but we do not have quite yet a price breakout above that old pivot. And if we look at ACWX in the bottom right, so these are international markets, international equities minus the United States, you can see we are taking out that June pivot, breaking out to new highs, and we are in a bullish trend here as well. So the weekly picture, that is the roundup, really no changes to speak of. When we look here at the daily chart, you can see things a little bit closer here, but really there hasn't been a whole lot of change. We've been kind of bullish on the daily on all of these markets for some time. The most interesting is the bottom left, the Russell 2000, and we talked about the transition up here in our last videos. We talked about how the Russell 2000 had been basically trendless for a month worth of trading, and we finally got the upside breakout, and we finally got our smart trend filter to move back up into bullish territory for the Russell 2000. So far, so good. That trend is continuing higher here, so the signal seems to be pretty on point. And again, we do have some nice rotation, and as we talked about, the Russell here is one of the best performing over the past 5 trading days. So in terms of daily trends, this is the biggest change here, and it is continuing to support those higher prices. Now, if we take a look at some of the price actions specifically, and we look at the S&P 500, this has basically been the roadmap that we've been looking at. We spent a lot of time in between this 3130 to 3140. First is resistance, then is support. Then we eventually held that support. We rallied up to this 35 zone, which again was the June pivot high here, and you can see the market really for the S&P 500 has been behaving beautifully from a technical basis. If you're a market technician and you're looking at some of the price action here in the S&P 500, it really doesn't get any better than this in terms of just traditional support resistance being respected and price kind of hesitating exactly where you would want to see it. And the S&P 500 on Monday came into the week with a breakout over the prior June pivot here, breaking above our 33.25 level, or I'm sorry, I keep saying 33.25, but it's 32.35, breaking above it. And you can see today, not the prettiest looking candle here, but we know that the trends are still at our back right now, and we can use this level as a line in the sand, an upper level kind of momentum line in the sand. That's usually how I like to label it. If we start rejecting here, if we start falling back below this level, particularly on heavy volume or some expansion in range, that is cause for concern. That could lead to false breakouts and bigger pullbacks. But until and if that happens, the benefit of the doubt here still belongs to the buyers. If we zoom out, we've been talking about in our past few videos that this gap from back here, see if we can get the chart back to this level. If we remember price before the big meltdown here in first quarter of this year, we had this gap down, which really kind of set the momentum to the downside back on the 24th of February. This open gap is still here, still open, and that's sort of the target or area where we would expect this market to rally to, potentially close this gap and retest the all-time highs for the S&P 500. That's certainly the bull case. There's not a guarantee that it happens, but if the technicals continue to hold up and support this market like they have been, then it does seem like it's an eventuality before we get up there, barring any swift rejection. So that is the S&P 500 roadmap. If we look at the Russell 2000 here, you can see that we've basically got, again, a pretty constructive picture in the short term. The fact that we broke over 144.50, we were using this 144.50 to 145 as sort of our band of resistance here for the Russell 2000. We got the breakout last week, of this range. We saw this nice 3.5% up day. Price then stalled out for 3 sessions. We went into the weekend basically with a lot of price compression. We continued that price compression yesterday on Monday, and then today we got the breakout here. We got bulls trying to move this higher and continue this breakout. Of course, it wasn't the prettiest close, so we didn't get a close near the highs. We did pull back into the close of the session, but still, from a price structure perspective, we are heading in the right direction if you're bullish on this market, and we suspect if this can hold 152, the prior June highs here, are where we would expect the Russell 2000 to get back up and retest back below 144. That changes our tune, that changes our outlook here. So until and if that happens, it looks like bulls in control here for the Russell 2000 as well. Now the Nasdaq 100, this is something that we and I think lots of people were sort of sounding the alarms last week or so, the last 5, 6, 7, 8 days of trading with the Nasdaq 100 finally starting to take a little bit of a breather and seeing that potential rotation into small caps and some other areas of the market. Frankly, it would be well deserved, as we've mentioned here. It would be perfectly healthy for the Nasdaq 100 to even see 5, 7, 10% pullback, even though that sounds extreme. That would be perfectly normal and healthy given the ground that it has covered. So far, that hasn't happened, though, because we came in this week on Monday with a massive move back up, or 2.84%. I guess that's what I'm calling massive here, but almost 3% rally yesterday on Monday, putting it back up to a new all-time closing highs for the Qs. And then again, you saw basically some whipsaw action here where we saw some divergence once again with the Nasdaq today, clearly underperforming and closing red, down 1%. So when we sort of look here at the Qs, I can't help but think that there is a little bit of there's certainly some underlying pricing or repricing or some big players sort of adjusting here when we see these types of moves, when we get moves like we saw back on the 13th, 2% down, big outside reversal day. And then we're seeing this, we're seeing the gyrations here of 1 to 3%. And you're actually seeing stocks kind of break down in some correlations where the Nasdaq isn't following along with the rest of the market. So call it rotation, call it, repricing, whatever it is. Earnings season, of course, being a potentially big factor here. We have lots of these companies that are going to be reporting soon. I think Microsoft being the first, if I'm not mistaken, coming up soon. So keep that in mind. But ultimately, again, when we just take a step back and we zoom out here, again, we've just got this monster uptrend that has been just dominating the markets here for the Nasdaq 100. So bigger picture, trends are all very much intact. Things look healthy. It is still the market leader. In the short term, though, however, again, a pullback or some sideways behavior would be more than welcomed and would be healthy to sort of set us up for future rally. Once again, we'll see how that develops, but pay attention to earnings season as we're going to have some of these companies start to report. I think mostly next week is going to be the bulk of them, but again, I think Microsoft kicks off soon. So that is the roundup there on the major averages. If we look at some of our other screens here, we've got credit markets, which are nice and healthy in the top. VIX still on a sell signal. TLT on a buy signal once again on the weekly chart. If we go down to a daily on all of these, you can see the VIX once again still here on a sell signal. TLT on a buy signal. And commodities are actually what I wanted to hit on today because seeing some very big moves here in GLD and silver. So gold, let's see, on the daily, let's just go to the daily chart here. So you can see gold today up 1.21%. Look at the separation on the trend filter. Look at silver in the top right here. Look at the separation of this dot, which just basically goes to show the acceleration, the strength, the momentum in this market. Now, granted, when you get this type of stretched behavior, it can lead to some short-term mean reversion or some short-term kind of a blow-off of sorts, but longer term, of course, the trend has been strong here for silver. This really shouldn't be anything new in terms of a surprise. We've basically been highlighting the bullish trends here in the commodity space. If we look at gold from a price action perspective, you had this big range that it went sideways in. We posted several charts of this on social and talked about it in the videos as this was consolidating here. It broke out. It just basically took its time after the breakout, and now you're starting to see the more sort of acceleration pick up here. So obviously gold extended in the short term. It's a real tough chase, but if you have a position, you can kind of trim and trail or, manage your risk, protect your risk, all that fun stuff is probably something you want to be thinking about. Same thing with silver here. I mean, just a monster move back up to this old levels here back from 2016. In fact, sort of taking them out or closing right at them. Take a look at the volume, one of the heaviest volume days you're going to see in silver as far back as I can get this chart, which is only 2014, 2015, but in the past 5-6 years or so, this is the highest volume day that we've seen, and it is occurring to the upside here. So silver, gold, very impressive. And when you look at gold here, and I'll move on after this, or actually I think we'll end with this, but if we look at gold here, this thing's up 21%, the metal here on the year, which is pretty extraordinary, right? I mean, 21% is a huge year for metals. Silver, I think, is pretty much caught up with it now. It's up 18% this year. But gold, silver are in their own bull markets, and that's not anything new. But when you compare that to even the S&P 500, which is up 1% on the year, just about, you have a 20% commodity gold or 1% S&P. Of course, if you pick the Nasdaq here, I'm sure the Nasdaq's up a little more than 20%. 24% this year. So gold really has been behaving just like an equity, and it probably has some less beta. But again, this is not necessarily the time to get excited about gold, to get into gold. You've had many opportunities kind of here in the past, so you got to be, you got to pick your spots. But I think it's just an interesting time to sort of highlight and look at some stats on it, just given the epic move that it's seen. So I think we'll end it there. Remember, earnings are out all this week. We got companies, this is a big week, and then next week will be a big week, probably for a lot of the trading names. So keep that in mind as you are picking any stocks right now and looking at your holdings. And as always, thanks so much for tuning in and watching. Every Tuesday we do the midweek video. Wednesdays we do some trade ideas. Fridays are long-form market recap videos. So thanks for tuning in and watching. You can subscribe on our YouTube channel or follow us at The Trade Risk. Have a great rest of your day. We'll see you back here tomorrow for some trade ideas.